What does the Bundesbank think about what Bank of Japan did?
Oh, I'm sure they disagree with it.
I'll say.
And, you know, it's just unfathomable to me that you have Bundesbank officials essentially arguing that the ECB has somehow done too much. Too much. Based on what are they looking at? Obviously, they're not looking at the money supply. The monetary base has actually collapsed in the Eurozone, down 30+% from the 2012 highs. They're not looking at nominal GDP, which is flat on its back, inflation way below target, money supply growth way too low.
I want to get to ECB, Brendan. I know you want to get a nominal GDP here. Michael Darda, what happens if Draghi says to the Bundesbank, forget about it? Charles Weitplatz, Paul DeGuire, and many other leading economists say, just see if they'll blink. Why is this the moment where Draghi's got to say, no, this is the way we're doing it?
It is the moment. You know, I mean, the Eurozone is in jeopardy of failing as a currency experiment. And the reason for that is monetary policy has been way too tight. This is not about fiscal headwinds or austerity. The UK and the US actually have had more austerity over the last 4 years than the Eurozone as a whole. If you look at the IMF fiscal monitor, the swing in the so-called cyclically adjusted fiscal balance, over 500 basis points in the US, over 400 in the UK, 300+ basis points in the Euro area. So the underperformance in that business cycle can only be explained by monetary policy. And so they need to get going, and they need to get going soon. But I would say curb your enthusiasm. If there's anything we know about the ECB, it's too little, too late, and then reverse too soon. That's the story of the last 4 or 5 years.
You know, there's an acronym you keep coming back to, NGDP, nominal GDP. And, you know, we were talking earlier, it sounds a lot like the academic work that Scott Sumner did, this lonely blogger writing for years trying to influence policy, and it sounds like it's working with you.
It is working with me. I mean, Scott Sumner is the leading light of the market monetarist movement. He's had a huge influence on me, but he now has a fairly wide following. In this, he makes the point, it's simple but very powerful. If you're looking at a monetary shock or a demand-side shock, you will see that in nominal GDP. If this is just about structural headwinds in the Eurozone, supply-side factors, it doesn't really affect nominal GDP. Nominal growth would look about normal, and real GDP would be weak. Inflation would be elevated. That is a supply-side shock. In the Eurozone, nominal growth flat on its back, inflation flat on its back. That's overly tight money. End of story.
I want to go back to something you said earlier about how the ECB has been very consistent in the last 4 or 5 years doing too little, too late. Part of the shock in the BOJ action was that it was a total surprise. So many people didn't expect it. The board was divided at the BOJ. Does the ECB have the capacity to take investors by surprise structurally, even if it wanted to?
I think so. What's interesting about the BOJ vote is that it was very close, but markets still had an enormous reaction. Also, consider the fact that we saw big rallies in European equities and U.S. equities when the BOJ took that action. That alone refutes this idea that somehow it's beggar thy neighbor and that it's a zero-sum game. Japan is stealing growth from other parts of the world. That's a
pushback.
Yeah, and it's nonsense. If Japan is stronger, the rest of the global economy benefits from that. If the Eurozone's flat on its back, that's a drag on global growth. So, I think the financial markets pretty much told us, instantaneously that it doesn't have to be a widely supported policy, to have a significant impact, and it's not a zero-sum game.
I sense a kind of a frustration. When you talk and in your notes, this is from your note from November 3rd, if the ECB gets it right for once in a row, Japanese like German bund yields would rise as inflation expectations recover and growth expectations improve. Why is this so hard?
Well, I mean, I think a lot of the commentary out there, unfortunately, on this specific issue is confused. So, for example, you have many commentators relating the success or failure of QE to did it lower long-term interest rates. Well, those German bond yields are, 80 basis points, not because there's been QE in the euro area, but because the business cycle is flat on its back. Inflation expectations have collapsed. So if you're running a deflationary monetary policy, you're going to have low bond yields. if they run a policy that actually invites adequate nominal GDP growth, inflation expectations recover, those yields will go up, not down, and that would be a success. So
it almost sounds like you're paraphrasing
it's passion,
Friedman.
not frustration.
Stagnation is always and everywhere a monetary phenomenon.
It is. If you go back to, Friedman basically figured this out over a generation ago. And if you just substitute nominal GDP for money stock in those writings, he just nailed it. He basically said, the only way that you're going to have central banks that can keep bond yields consistently low is through deflationary policy, right? And we're seeing that play out. The QE central banks, the UK, the US, have stronger business cycles and higher long rates than the Eurozone, which, until very recently has not done.
Our next block, Michael Darda on Krugman Economics and his love for further stimulus.